Adam Sellers, MCA Accountants here. Today I'm going to run through our BAS reconciliation checklist, which we use to go through a client's accounting file before we do a BAS. So it's essentially our list of checks and balances that we go through to make sure the Xero file, QuickBooks file, whatever it is, adds up, looks okay, so the GST figures, the pay-as-you-go, that's all accurate to do a BAS. Now you can get our BAS reconciliation checklist for free from our website. So www.mcaaccountants.com.au/resources/brochures, and just scroll down a little bit. Let's get my face out of the way. There we go. And it's in the list here, BAS reconciliation checklist. So click on that, and on the right, that's what opens up. So in the summary, I've got a list of reports that we suggest you use, and they're the ones that we would look at. And then on page 2 is the checklist. So I'm going to quickly run through this. I'm not going to go through it in great detail. It can be lengthy to go through, especially if things in your Xero or QuickBooks file aren't quite right. I'm not going to go through all of that, but I am going to go through the basics of it, give you a head start on doing it yourself. So the first things first is review the profit loss report for any glaring inaccuracies. Now I'm using the Xero demo company. I have gone through and reconciled the items that are there. The demo company does have a few issues with it. It all works perfectly fine, but it doesn't add up. There are things in there that are not quite right. So just bear with me. You know, things may not reconcile as they normally would. I'm going to highlight those as we go through. But to start with, we're going to get a profit loss up. As soon as we find it. There we go, profit loss. Now I've just picked one out. So we're going to do the September 23 quarter here. Now I've just printed one out that's got the 3 months in it and the total for the quarter. You could do one with a quarter and a couple of quarters previous to help you compare. It's entirely up to you what you do there. But at the end of the day, you're just looking through it to see, hey, is there anything there that just doesn't look right? There's $3,000 in, or $2,500 in advertising. Did I spend $2,500 on advertising? No, that's not right. I need to have a look into that. You know, wages, I've only got one employee that earns $60,000 a year. How could I possibly have $13,000 of wages in a month? Am I doubling it up somehow? I need to go investigate this. You're just doing a quick look at the profit loss to see that everything looks on face value is okay. Once you've done it, tick it. If there's any notes in there, throw them in there. Keep it as a record of what you've done, so you can go back to it at a later point and go, oh, hang on, this is what I've done. Or if your accountant asks you at year end, you've got some notes. Number 2, review the balance sheet. So same thing, we're just looking to make sure everything in there looks okay. You know, do we have $22,000 owed to us by customers? Do we have $14,000 owed to us by owed to suppliers? Bank accounts, there's money in the bank, you know, we've got a little bit of equipment, things like that. We're just having a look through. Now you'll notice historical adjustment, you're not going to see that in your file. It is in the Xero demo file, one of those things that aren't right, that with a little bit of work you'd get it right, but you know, for this demonstration we're not going to. So you've gone through that and you're okay. Now your next thing is make sure every bank account is reconciled. You could arguably do this first. I've put it as third in our checklist, so we just want to make sure all the bank accounts are reconciled, and to do this we would normally get the bank reconciliation report. So I've got the bank rec summary here. So it's saying for the savings account, the balance in Xero matches the expected statement balance, so that should be okay. With all of these softwares, I would suggest highly that you actually get your bank statement and make sure it matches. Don't just, because Xero says statement balance, doesn't mean that is the actual statement balance. It is a calculated statement balance from a few different sources of information that Xero has. It can be inaccurate. The savings account we've checked, and the trading account has some issues. So this one has a few things in there. Calculated statement balance is different to the imported statement balance. So there's a few things in there that may need to get looked at. Outstanding payment, so that's a payment that's been manually entered into Xero and hasn't been matched against an actual bank transaction, so chances are that's a double up. Now that's dated 2017, I don't know what Xero's doing in the demo file there, but that's probably something that needs to be removed or fixed up. These unreconciled statement lines are generally from the dashboard where you've got a little reconcile here. It says you've got 3 items outstanding, you go in and brings up a list. That's what they normally are, but you'll see here I don't have any. So the question is, why are they showing up here as unreconciled? Now if I click into one, we're going to see the problem here is, and Miss David Jones was one that popped up. David Jones has come through the bank account on 29th of September. It's been matched against a Xero transaction dated the 1st of October. So according to Xero, this transaction happened in October, but according to the bank statement, it happened in September. What I would suggest doing is changing the date on your Xero record to match the bank, and that'll solve that reconciliation issue. I have seen these issues, a couple of days here, at the end of the day isn't going to matter too much, but I have seen them where the wrong year is put in and all sorts of problems, and especially if they're large amounts, can cause problems with GST reconciliation reports and getting the BAS right. So I would go through, fix those up. So fix these up, get it reconciled. Once you've got it reconciled, tick OK. Let's get rid of those. Next, I would check your aged receivables and aged payables reports. So what we're checking is that the total aged receivables and the total aged payables, make sure you get the dates right, matches what's on your balance sheet. So if I find our balance sheet again, accounts receivables 22,217, receivables 22,217. Beautiful, that matches. If it doesn't match, you've got a problem. Especially in Xero, it's really hard to get it not to match in Xero because it doesn't let you post to the age receivables account directly. But in some other software you can, and it's really easy to get that wrong. Same with the payables, 14,244.54, 14,244.54. So they're matched, we're happy with those. Next, we're going to check the payroll report matches the wages and superannuation in the profit loss, and we also should check at the balance sheet, which is a later step, but for now we're just going to do the profit loss. So if I find payroll report, so I'm going to change this to last quarter. Now it's saying here for the last quarter we've got 10 grand gross wages. If I look at our profit loss, we've got 33,000, so something's not right there. Now when I was preparing for this video, I looked into this one. As soon as I get the right report up, so I've got payroll here, get my face out of the way. Now we can see here that there are only pay runs in the Xero demo file going back to the 9th of September. So there's wages for July, there's wages for August, but there's no payroll history for it. There's no pay run in there. Why the Xero file does that, the demo file, I've got no idea, but that's where the problem is here. In your file, it should match, and you do want to make it and make sure it matches. Let me get rid of that. Now, I've got a payroll report up here somewhere. Okay, so you are getting this report here. You want to check that this matches your total wages. You should also check that this is your total super on your profit loss. If they don't match, you need to work out why. It could be because of the deductions. If deductions are salary sacrifice, it could be that that $200, instead of being in gross wages, is instead in super. And super for the quarter is actually $1,157, not $957. And wages is $10,695 instead of $895. So you need to go through and get that right, because if you can't get your profit loss to match your payroll reports, how do you know the figures are right? Which one is right? You need to know that because you're putting it on a BAS, telling the ATO that's what the figures are. Now, as of, I think, this September BAS, the ATO has started pre-filling on BAS's wage figures. So gross wages and total tax. So again, really important to get the payroll report right and the STP lodgement. So the STP, single touch payroll, every time you do a pay run, that's lodged with the ATO. The ATO is collating those and putting them on your BAS and pre-filling them. If your figures that come through are incorrect, you don't just change it on the BAS, you need to actually amend your payroll figures and do new pay runs, amended pay runs, and new lodgement to get it right. So I'm going to tick this payroll report off. They don't match. We know why, but we're going to assume you've gone through it. Now, depending on what software you're using, you may have a payroll clearing account. So what happens when you do a pay run in Xero? Xero will post X amount to wages. So it'll put 10 grand to gross wages. It'll put 957 to super. It'll put 1700 to tax withheld. And this net pay 8,977 will go to a wages clearing account. And then when you physically pay the wages from the bank and you allocate that bank transaction, you allocate it to the wages clearing account. Assuming you are physically paying the same as the net pay each week, then the clearing account goes up $8,000 and then comes back down to zero. And it's always going up and then back down to zero. So at the end of each month, each quarter, whatever your BAS period is, it should be zero. Unless you've got a pay run that's dated 30th September but was actually paid on the 1st of October or something like that, that clearing account should be zero. If it's not zero, it's a big sign that there is a problem with your payroll. So this would normally be in the balance sheet. Again, get my face out of the way. It would be down here somewhere. It doesn't show up in the Xero demo account. Again, not sure why, but it's just not something that's used. So go through that, tick that off. Now the next item is making sure that previous payments of GST and BASs were allocated correctly. And this is really, really important. The balance sheet here, at any point in time, the balance sheet shows what your assets and liabilities are. One of your liabilities is GST, another one pay-as-you-go withholding. You've got income tax, you've got other taxes, you've got super payable, all that sort of stuff in there. You should be able to look at a balance sheet and know that that figure is what you owe at any given point in time. And the whole purpose of this reconciliation checklist is to make sure that the balance sheet figure is correct, and ideally the balance sheet figure matches various reports. Now, you'll note here that last month, or last quarter, there was $791 of GST owed to the business. That's a negative liability, so it's an asset, so it's money the ATO owed the business. Now, if that refund has not yet been received, then the GST figure showing at 30 September is not only September's GST, but it's also June's. So 1465 is $2,000 odd of September, less $791 expected refund from June. So you need to know, have you paid it? If you have paid it, is it allocated correctly? So you can work out, well, what's this GST figure supposed to be? Is 1400 right, or should I be putting 2000 and something on our September BAS? So normally we'll just open up the GST account, scroll through it, and just check and see, is there a BAS payment in there or a BAS refund, depending on what it is. Just going to give that a second to open up. Okay. So we'll just scroll down through here. I'm not seeing anything with the ATO. I'm not seeing anything that's $791. Keep scrolling down. You know, no ATO, no $790 amounts. So on, so on. So we go through here and we work out that that BAS refund hasn't come through or it has come through and it hasn't been allocated correctly. So you need to investigate that, work out which is correct. Once you've done that, if it has been paid, you've allocated it correctly, which means splitting it between GST, pay-as-you-go withholding, income tax, if there's fuel tax credits on there, if there's wine equalisation tax and other things, getting those allocations right. If you're not sure, get your accountant to show you. They'll only have to show you once, give you a template, and you'll be able to do it every time. So once we tick that one off, the next one is reconcile the pay-as-you-go withholding account in the balance sheet, which is this here, with the payroll report. So according to the balance sheet, we owe $7,500 pay-as-you-go withholding for the quarter, or at this point in time. There was zero at the end of last quarter, so theoretically that is all this quarter. We saw a payroll report before, and for the quarter, we don't have those figures. We've got tax of 1718. We worked out why that was before, and that was because the zero demo file doesn't have pay runs going back to July. So this payroll report was never going to be right, but this is something you need to check. So if you're doing quarterly BASs, that figure on the balance sheet should match your quarterly payroll report. If it doesn't, is that because you haven't paid the previous quarter's BAS and the pay-as-you-go withholding? Is it because you're actually doing monthly wages with quarterly GST, so you should be looking at a monthly report? There's a number of different reasons. It could just be that the payment isn't allocated correctly. Whatever it is, you need to find it, you need to fix it, so that you can say, well, this $7,500 is correct, or if it's not correct, you know why. And it may be because the last quarter's BAS isn't paid, so it's effectively 2 quarters worth. In which case you probably run a payroll report for the last 2 quarters, the last 6 months, and make sure that match. So once we've gone through that, we're ticking that off. Now this is where things start to get a little bit tricky. You've probably heard that you can do your BAS and GST on either an accrual or a cash basis. An accrual basis is that you're doing GST based on invoice dates and bill dates. So when you invoice a customer, whether you're paid or not, you owe the GST to the ATO on that invoice. When you're on a cash basis, you only owe that GST to the ATO when you are paid for it. So if a customer takes them 6 months to pay you, you don't have to pay the ATO for 6 months. Same applies on the other end though, with your suppliers. You get a nice big supplier bill. If you're on a cash basis, you can't claim it until you've actually paid it. Now we often get asked whether we should be on cash or accrual. To a large degree, that depends on your business circumstances, whether you're likely to have higher debtors or creditors, because if you've got a business that has no debtors but has high creditors, you want to be on an accrual basis so you can claim the GST on those bills before you pay it, and you don't have an issue of having to pay the ATO before you're paid because you don't have debtors, don't have accounts receivable. Most businesses we deal with are on a cash basis, which makes reconciling the figure in the balance sheet here a little bit more difficult. If it's an accrual basis that you're working on, the figure in the balance sheet should equal the amount of GST that you owe today. So 1465, remembering that we've got this 791 that we think is just unpaid or unreceived from the ATO yet. So we think, put those together, it's 2,200 odd. We think that on an accruals basis, we owe the ATO $2,200. On a cash basis though, that could be completely different. So this step here is reconciling the accrual GST report, regardless of what your method is, whether you're cash or accrual. I want you to look at an accrual GST report and check it against a detailed GST ledger report. Now, I've got this BAS report here on accrual method. It shows $4,400 of GST on sales, $2,178 of GST on purchases. I want to check that against what's actually in the ledger. which is one of these reports. And I got to this report, it's probably easier if I show you. Just from the balance sheet, open up the GST account. I'm going to wait for that to load. And this shows you every transaction that is in the GST account for the quarter. Okay, so you can see opening balance 291. Just going to ignore that for the minute. What we would normally see, go right down the bottom, get my face out of the way again. This total column here, the credits would often match the GST on sales, and the debits would often match the GST on purchases. So 4,598, does that match the activity statement report? It does not. 4,435. So we need to try and work out what's going on there, because they theoretically should match. If there's a payment of GST or a receipt of GST from the ATO, then you would adjust for that. So let's say this $2,000 figure included $700 of GST refunded from the ATO. Then we would adjust for that, and we would say that there's actually $1,600 of GST on purchases going through this account. That's not the case here. So we need to try and work out why that is different to the GST report. Quite often it's because of returns, credit notes and things like that. So there's a receivable credit note here. There was a payable credit note somewhere. And another way to investigate it is to have a look at your detailed GST reports that come with the activity statement. So you can see here how it's coming to GST on income is all these amounts totaling 4,435. You will notice there's a few negatives in here. Negative 35, negative 5, negative 2, negative 50. But there weren't the same negative amounts in the detailed ledger there. Now I dare say that some of these invoices, some of these sales have positive and negative figures on them, and then when the reports here are being presented, we're getting negatives in here, which is bringing this down from the 4,500 that we've got in the ledger to the 4,400 on the report. We're just going to accept that for the second. What we're going to do, we're going to go back to our summary. And I'm going to bring up a calculator, so I just want to check something. Now on our GST report here, we've got 4,435 of GST on sales and 2,178 of GST on purchases for a net of 2,257. Let's go to our detailed ledger, this one here, GST transactions. And let's see what 4,598 minus 2,341 is. So does it equal 2,257? So 4,598 minus 2,341, 2,257. So I take that as the amounts going through this GST ledger report match what is showing up on the BAS report here. We've got the same net figure on the report that we've got in the account, which is actually 2,256, the total of this gross column. So for me, they match. Even though the total credits don't match the total sales, we can explain that through some negative sales that are showing up, that are just showing in this report a little bit differently, but the net figure's the same. So for me, that would be a tick. I'm happy to tick this one off. So I'll tick that one off. Now, one thing you should also do is reconcile your sales as per the GST accrual report against the sales and the profit loss. So we've got here total sales 48,000. Now that there includes GST. So if I come back here, get our calculator out again, 48,791, take away the 4435 in GST, then theoretically the sales in our profit loss should be 44,356. Let's find our profit loss again. Okay, 44,356. Perfect. They add up. Very happy with that. Nice and easy, we can tick that off. Now again, we're checking the accrual GST reports. No matter what basis you're doing your GST on, we're checking accrual GST reports. And the reason for that is that the profit loss and your balance sheet are always on an accruals basis, or at least they should be. If you're printing out cash profit losses and cash balance sheets for any reason, stop it, don't use it. Software companies should not include them. They are the biggest waste of time, in my opinion, ever. Just look at a normal profit loss. If you've got the option for cash or accruals, ignore it, always pick accruals. So now we've done those checks, this is the hard part. Actually reconciling the GST account in the balance sheet against GST reports. Now, on an accruals basis, it's relatively easy. So I'm going to do this one as if it's an accruals basis first, and then I'm going to show you on a cash basis. So on an accruals basis, GST on the GST report was that 2257 figure. We don't have to worry about that's a cash one, that's a cash one. And I probably should label those a little bit better on this reconciliation checklist. Oops, sorry, that one's not. So this one here, plus or minus prior period BASs not yet paid or received, i.e. cleared from the GST account. So remember we spoke about this 791 before. We checked inside the GST ledger to see if that had been received by the ATO and put through there, but it hadn't. So here we're going to have minus 791. Now if we go 2257 minus 791, we get 1466. And that should equal the GST on the balance sheet. We've got 146546, that's within margin of error, so we're happy. So on an accrual basis, this adds up. On a cash basis, it's a little bit different though. Now these two figures, actually that one's different. This figure's the same, GST not yet paid or received. I'm going to go and get a cash GST report now. So I'm using a different report. Makes it easy to identify the cash versus accruals. And this report is saying that on a cash basis, GST collected is 2,400, GST paid is 883. Get our calculator up again. So 2415 minus 883 is 1532. So that's what our report is saying is the GST we owe for the September quarter. We also need to factor in GST on the accounts receivable and accounts payable. Now because a balance sheet is always on an accruals basis, this accounts receivable here, 22,217, includes some GST. And I'll get the receivables up. On that 22,000, there's actually 2,019.73 cents of GST. Now that GST is sitting in this GST account on the balance sheet, but it is not currently payable to the ATO. So when we're reconciling it back, we need to make an adjustment for that. So 2019.73, I'll round that to 2020. And same thing for payables. Now again, bills are in there. The bill is in the balance sheet, the bill is in the profit loss, and the GST is in the GST account, but we can't claim that from the ATO yet. In an ideal world, this GST account would be split into two. It would be GST claimable now and GST claimable in the future. Xero doesn't do it. It's hard to manually do, so we have to manually work all that out. So anyway, we're going to see if this adds up. So 1532 minus 791 plus 2020 minus 1295 hopefully equals the GST on the balance sheet. And it does. Again, we're out by something cents, but that's because we've rounded it. Now, most of the time, this will actually work. It's not that difficult to do, and this reconciliation, if it doesn't match, it's normally because of prior period BASs not being paid or allocated correctly, or errors in prior BASs that have been fixed up or need to be fixed up in this BAS. Sometimes we see clients will go in and change prior period figures, so there'll be an invoice that they're not going to collect. Instead of putting a credit note in dated today, they'll just delete the invoice. That changes the prior period figures, doesn't get captured in a current period GST report, but when we go and do this reconciliation, we go, well, hang on, the balance sheet, GST balance sheet doesn't match the report, even when we've done this reconciliation, so we know that something's changed. You delete a $100,000 invoice, there's $10,000 of GST that is never going to get found unless you do this reconciliation. Your business may not deal with $100,000 amounts, but whether it's $100,000, $10,000, $1,000, you do a few of those errors, they add up. And you come to do the year-end accounts, the accountant will pick those up and they'll go, hang on, you owe the ATO 10 grand. You've underdeclared your GST and you're unaware of it, you didn't see that coming, you're in shock, you don't have the money for it. You know, we want to help you prevent that situation. So this reconciliation here will help pick up those errors, and if this didn't work, then we would know that we need to go and have a look at prior period to see what's changed. If you've got this done every quarter and you've got a copy of it, you could just see, has this GST figure changed on my previous one? If it's changed, you know that you've changed something in the file and we need to pick that up in this BAS. Normally what we would do from here, if they don't match, we would disregard the GST report and we would actually substitute our own figures in so that we are reporting the GST amount that matches the balance sheet, or at least matches this reconciliation. So in this case, we would work backwards. We'd go 1466, and let's for a minute imagine that the balance sheet actually read 1666. We'd start that here. We'd go here, 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 and say, well, what is the figure we need to put in our GST report for this to work? That's essentially what we do. Now look, I'm up to 33 minutes of just explaining it and I haven't done any work. This can take you a couple of hours to work through. It takes us a couple of hours to work through on some files. There are some where the reports come out and they all match and it is a 30-minute job. Quite often something doesn't match. There is something that needs to be fixed up. So this can take us an hour, 2 hours on average, sometimes 3. And depending on what sort of state the file is in, it can be a lot longer. If bank accounts don't reconcile, that can take a fair bit of work to get right. Don't forget to make notes along the way, so if this doesn't add up, make notes why, so that if you have to go back to it, you know what's happened. And then the final step is complete your BAS. Obvious. Got the figure that you're happy with, put it on your BAS, lodge it, send it to the ATO, pay it, and so on. And we've got a final one here, a compliance check. So it's really just making sure that if you've got wages, do you have work cover? Is there a payment for it? Should you be registered for payroll tax if you're not registered? Are there any fringe benefits that we need to start thinking about and looking at? So just a couple other things that we can look at every quarter to solve a problem or prevent a problem occurring later on. But that is essentially our BAS reconciliation checklist. Look, it's a 35-minute video. Sorry it took so long. I went through that pretty quickly. There's a lot of things I didn't explain as fully as I would like to. But obviously, sitting and watching me and listening to my voice for 35 minutes is challenging enough. I don't want to extend that. So what I would suggest is have a look at the video, and if you are keen to do your own BASs, sit down with your accountant and do one together. Yes, you'll have to pay them for a couple of hours of time, but in the long run, it'll be worth it, I promise you. If you have any questions, feel free to reach out to us. We'll happily work through it with you. If you're one of our clients and you want to do your BAS yourself, please get in touch. As much as our business survives on charging you for doing work for you, I find that overall, clients get a better outcome where they do the BAS themselves, because it means they're looking at their figures every 3 months at the very least. You're looking at it, if you're reconciling it, you're understanding your figures, you pick up when you're getting into difficulty quicker than you otherwise might be. Or if you're doing really well, you'll go, hang on, you'll see the profit loss, I'm making a lot of money here, am I going to have a tax problem? It'll prompt you to ask us a question. So yes, we're more than happy preparing your BASs, we're more than happy charging for it. Obviously that's our business, that's how we pay our bills, but at the end of the day, I would much rather you have a better understanding of your business, and if that is you doing your own BASs, and if we can help you do that, then I think that's a great outcome. So please feel free to reach out to us if you want to do your BASs yourself. We'll run through doing the first one yourself, do the second one yourself, and then send it to us to review and make sure you've done it right. And then from there, you should be able to do it yourself. Thank you for your time.